when we look at your view on higher ed, there's a lot of structural headwinds. You've got the demographic cliff, you've got obstacles for international student enrollment, affordability concerns. Do all these things lead to higher borrowing, more borrowing?
Well, it's great to be with you again, Scarlett. Thanks for having me here. It's a great question, and it's one that we're thinking about a lot as we invest across the sector. So taking a step back, as you mentioned, there are all of these headwinds that are really coming together right now. You mentioned some of them, and it does lead to investors approaching the sector with a lot more caution. I think back, 10, even 20 years ago, investing in the sector when higher ed was really looked at almost to be a boring, very stable, very, very highly rated sector. Now, when you look at the rating agencies, about 50% of private colleges are rated BBB and below. So that really is just demonstrating the amount of credit risk that there is in the sector now because of some of those headwinds that you've mentioned. I would also add affordability concerns is huge as people are looking at going to college. And so as we're thinking about investors, when we're talking to clients, we're saying approach the sector, approach it with caution, and make sure that you're getting compensated for taking on some of these risks.
So endowments get brought up a lot as evidence of an institution's financial health. How critical is having an endowment of at least $1 billion? Does that protect an institution's creditworthiness?
So it's so interesting because in the higher ed sector, everyone talks about endowments. And when you look at the data, there's about 150 colleges in the country, colleges and universities that have endowments of $1 billion or more. There are more than 3,500 higher ed institutions in the country. So when you think about those large endowments, it's really such a small portion of the higher ed sector. I will say, though, endowments are really important. And I think that's why higher ed is such a resilient sector, because unlike other sectors of the muni market, think about hospitals, think about long-term care, think about charter schools, think about, even some of the governmental sectors. Higher ed does have these balance sheets. So even if it's not $1 billion, but if you do have an endowment, you can spend off of those endowment earnings. And what it gives an institution is time. It gives them time to implement a turnaround plan, time to grow enrollment, to introduce new programs if that's what they're trying to do.
So it gives them a lot of breathing room, and it separates the higher ed sector into the haves versus have-nots. The haves, obviously, the elite schools with big endowments. For everyone else, the have-nots, it's all about the collateral, and this is what your research focuses on, and that really comes down to real estate. Talk to us a little bit about how that factors in, and also how healthcare plays a role here as well.
Yeah, absolutely. So when we're looking for opportunities in the sector, especially in this have-not sector, and when we're talking about below investment grade or lower investment grade institutions, we're doing a comprehensive analysis of the operating drivers, the liquidity on the balance sheet. But then as a bondholder, you have to step back and say, what is my collateral here? What is bondholder security? We have done deep dives into real estate for some of these opportunities. We're looking at not only the value of the campus, not only the appraisal, but really thinking from a practical perspective, are there alternative uses for these properties? Could this college, if it was facing stress, peel off certain pieces of this real estate and sell it and still have a core operating campus? Because sometimes that's not the case. And so a mortgage is important, but if it's a mortgage in an area of the country with major declining demographics where you're really seeing not a lot of real estate traction, is that really worth something? And so that is what we're looking at when we are participating in these deals in the market.